So welcome to today's class. We want to go to chapter 2. We had looked at, in the last two classes, we had looked at chapter 1. Day 1, we looked at nature and purpose of cost and management accounting. That was, we looked at what is management accounting. We looked at what is data, what is information, managerial process of planning, control, and decision making, role and purpose of cost and management accounting, and differences between management accounting and financial accounting. In the second part of the chapter 1, we looked at what is called sources of data. We said that when we look at types of data, it can either be primary or secondary. It can either be discrete or continuous. It can either be internal or external data. And then we looked at how do we collect data. We collect data by what we call a sample. We looked at methods of sampling. There were two methods of sampling: probability sampling and non-probability sampling. So under probability sampling, we saw there are types or methods of probability sampling. We looked at what is called random sampling, stratified random sampling, and what was the other one? Systematic sampling, cluster sampling, and multi-stage sampling. And then we looked at non-probability, and in this case, we focused on what is called quarter sampling. So today we are moving to chapter 2, and chapter 2 is the backbone of management accounting, because what we cover in this chapter affects all the subsequent topics. All that we are going to cover that follows this, it depends on how we understand chapter 2. So chapter 2 is about cost classification. We defined what cost is in chapter 1. So today we want to look at how do we classify costs, and if we have time, although I always don't want to mix classification and the behavior part, the calculations part of behavior. So maybe I'll focus on cost classification, and then on a different day, we look at cost behavior computations. Now, let's start by looking at what is called cost classification. Cost classification. So remember, we said what is cost? We started by looking at what cost is. We basically saw that cost we said last time in chapter 1 is the sum of expenditure incurred in order to make a product or to offer a service. Sum of expenditure incurred in order to make a product or to offer a service. That is called cost. So what is cost? Cost is whatever you incur in order to make a product or to offer a service. That is the definition of cost. So if somebody asks you, what is the cost? Cost is what you incur, what you spend in order to make a product or to offer a service. So we also need to look at cost classification. So when we talk of cost classification, now that we have defined what cost is, classification is basically the grouping of costs, that share the same characteristics. Grouping of costs together that share the same characteristics. So to classify, you group costs depending on their characteristics, depending on their attributes, depending on the attributes of the costs. If costs share the same attributes, characteristic, features, qualities, you group them into one category. So what is cost classification? Cost classification is the grouping of costs together, and it's the grouping. What influences the grouping? Costs that share the same characteristics are put in one category. So cost classification is the grouping of costs that share the same characteristics. Now, we will be focusing in this case on different ways of classifying costs, different ways or different methods or different ways to classify costs. So methods or methods of costs classification. Now, we can start by saying in this case, there are different ways of classifying costs. So we can start by focusing on that. There are different ways. There are different ways of classifying what? Classification of costs. There are different ways that we can use to classify what? Costs. Number one, we can use what we call classification of costs by elements. In other words, we can classify costs depending on their elements. We will look at that. Number two, we will look at classification of costs by nature. Classification of costs by their nature. Number three, we look at classification of costs by function. Number four, we will concentrate on classification of costs by behavior of the cost. Next, we look at classification of costs by decision. Classification of costs by what? Decision. Next, we look at classification of costs by the influence of management. We will look at classification by influence of management. Next, we'll look at classification by operations. The way we operate is there. That is number 7. Number 8 is there. There is one more. I always know that there are 8. So elements, nature, function, behavior. Okay. We'll also look at number 8, what is called responsibility. Classification by responsibility. Classification. This is really not classification of costs, but it's a classification. Classification by responsibility. Classification by responsibility. So let's take some time on each of these categories. And this is very important because the topics that follow, they follow the classification criteria that we are using. So I'll just be covering each one by one. So let's start with classification of cost by elements. So category number 1, classification of costs by elements, by looking at elements of what? Costs. In other words, classification of costs by their elements. How do we classify costs by their elements? That is what we want to focus on. So when we classify costs by elements, or let me just change it to classification by elements. So there are 3 elements of costs. Take note of that. There are 3 elements of costs. In other words, when you classify costs by their elements, we will find that there are 3 elements of costs. A, we have what is called materials. B, we have what is called labor. And C, we have what is called expenses. So when we classify costs, we can classify them as materials, labor, or even expenses. As material, labor, or even expenses. So what are materials when we have a focus on these? Materials are the physical. Materials are the physical inputs to a production process. What are the inputs into a production process? There will be a chapter called materials, so we will go deep into it. It will be a chapter on its own. Actually, it's chapter 4. Chapter 4 is on materials. So we will look at types of materials in that chapter, classification of materials. But for now, we should know what are materials, are the physical inputs into a production process. For example, e.g., timber in chairs. So in other words, when you are making chairs, what are the materials that is used? Timber is used in order to make chairs. So that is the first element, physical inputs to a production process. We also have another element of cost called labor. So what is labor? Labor is salaries and wages paid to employees. Salaries and wages paid to whatever is paid to the employee, be it the head of the company, who is the CEO or the managing director, or to be it an employee in the human resource department or production department, so long as it's an employee, whether casual or permanent, established or non-established. So long as it's an employee, it's called what? Labor costs. So this is material costs. Next is labor costs. Next is expenses. So e.g., salary of CEO, the salary that is paid to the CEO. That is an example of a labor cost. Next, we have what is called an expense. An expense is any element that is not labor or expense, or materials. Any expense or any element that is not labor or materials, that is not materials or labor, it's called an expense. Any element that is not labor or material is an expense. For example, when you pay rent, rent is not classified as materials. Rent is not classified as labor. Therefore, rent costs will be an expense. Electricity. When you pay for electricity, it is not materials, it is not labor, and therefore what does it become? It becomes an expense. It becomes an expense. That is classification of cost by elements. The third way to classify costs, number 3, the third way to classify costs is by their, not the third, the second way rather. The second way to classify costs is by nature of costs. Classification of costs by nature. Classification of costs by nature. So we can say that when costs are classified by their nature, there are two types of what? Of costs. So when you classify costs by their nature, there are two types of costs. When you decide to classify costs by their nature, there are two types of costs. The first type of cost will be called, so it can either be it can be direct costs, or it can be indirect costs. So when you classify costs by their nature, it can either be direct costs or indirect costs. Direct costs are also known as prime costs. So when you hear somebody talking of prime costs, those are direct costs. Indirect costs are also called overheads. So when you hear somebody talking of overheads, those are indirect costs. So we are saying that there are two ways of classifying costs. Costs can be classified by costs can be classified by elements. We have looked at it. By nature. Now under nature, we are saying there are direct costs and there is indirect costs. So what are direct costs? These are costs. Direct costs are costs traceable to a specific cost unit. Costs that you can see, you can locate them in the final cost unit. Costs that you can trace to the final cost unit. E.g., timber is traceable in a chair. Timber is traceable in a chair. So timber in that case is called what? Direct cost when we classify by nature. So direct costs are costs that are traceable to a specific cost unit. I will come back to that. Indirect costs are costs not traceable to a specific cost unit. These are costs not traceable to a specific cost unit. They are the consumables which cannot be located in a finished product, which cannot be located in a finished product. E.g., oil used to paint a chair. You cannot see the oil, but you know that the oil was applied. You cannot see the oil. You cannot touch the oil. It is not traceable. You cannot see it in the final product. Or even oil that is used in the machine, fuel that is used in the machine that is used to make the chair. Fuel that is used in the machine that is used to make the chair. That is an example of indirect costs. That is an example of indirect costs. Now, I want to continue further with that. So we have said either direct costs, so maybe let me highlight it, either it's a direct cost or it is indirect costs if I highlight. So either direct costs or indirect costs. Now, if I duplicate that and I start with A, I need to look at direct what? Costs. So we have said direct costs, we have looked at it. These are, we have said they are costs not traceable. Costs not traceable. Costs not traceable to a specific cost what? Unit. So what I want us to look at here, what are the types of classification of direct costs? We can say direct costs are further classified into 3 groups. Are further classified into 3 groups. Group number 1, there is what is called direct costs. Group number 2, there is what is called direct, sorry, not direct costs, I meant direct materials. Direct materials. Group number 2 is what we call direct labor. Group number 3, what we call direct expense. Yes, direct costs are traceable to a specific cost unit. Traceable. You can locate them into the final product. For example, you can see that the timber in this chair Timber, you can see, if I ask you where was timber used, you can say you can see the timber in the chair. It is traceable. You can locate it in the final what? Product. You can see it in the final product. So examples of direct materials are, e.g., what have we said? Timber in what? Chairs. So timber in chairs is an example of direct costs. Timber in chairs is an I'm trying to find out what do you mean by there is a mistake? You can just type. Okay, yeah. Cost traceable. Sorry, I meant cost traceable. Is not what I meant. They are costs traceable. Thank you. Thank you. Costs traceable. Costs traceable. Thank you. Thank you. So next we have direct labor, e.g., salary of employee making the chair. Salary of employee making the chair. Salary of the employee making the chair. Salary of employee making the chair. Salary of employee making the chair. That is an example of a direct labor. What about direct expense? Direct expense is, for example, rent of the factory where chairs are made. For example, rent of the factory where the chairs are made. So those are examples of direct costs. Examples of direct costs. We have said there are 3 types of direct costs: direct materials, direct labor, and direct expenses. What about part B? We have in B, we have indirect. Indirect costs. Indirect costs. Indirect costs are costs not traceable to a specific cost unit. Costs not traceable to a specific cost unit. So we can say indirect costs are further classified into three. We have indirect materials. Indirect materials. We have indirect labor, and we also have indirect expense. Indirect materials, indirect labor, indirect expenses. So what are an example of indirect materials? We gave an example, e.g., oil used to paint what? Chairs. You cannot see it. You cannot trace it. That is an example. Indirect labor example, salary of the CEO. The CEO does not make the product. So because the CEO does not make the product, he is paid a salary. That salary becomes indirect labor. This was rent of factory. Now it is rent of head office. Head office. That is an example of indirect cost. So in that case, when you classify costs by their nature, they can either be direct or indirect costs. Direct costs or indirect costs. That is number 2. So number 3, the third way to classify costs is by classification by function. Classification by what? Function. Classification by function. Classification of costs by their function. when we classify costs by their function. So we can say when costs are classified by their function, when costs are classified by their function, there are three what? There are two, not three, two types of costs. There are two types of costs. A, we have what is called production costs, and B, we have what is called non-production costs. Non-production costs. So when you classify costs by their function, these costs can either be production costs or non-production costs. So let's start with production costs. Production costs are costs incurred to make a product. Costs that you incur in order to make a product. Costs that you incur in order to make a product. There is also a second definition of these costs. Production costs are also called costs incurred from the time raw materials are purchased until when the finished product is made ready for sale. Or let's just try when the finished product is made. So costs incurred from the time raw materials are purchased until when the finished product is made, or costs incurred in order to make a product. Any of those definitions can do. Any of those definitions can work. So those are called what? Production costs. For example, if we classify costs by their function, the amount of money you spend to buy raw materials will be part of production costs because it was incurred in order to make a product. The amount incurred to buy timber will be production costs when you classify by function. Non-production costs incurred to support the production process. Just to support the production process, not to make, to support the process, not to make, but rather to support. Costs incurred to support the process. The second definition is costs incurred after the finished product is made until when the product is sold to the final consumer. Any cost you incur after you have made the product until when you sell the product to the final consumer, that becomes what? Non-production cost. It becomes non-production costs. It becomes non-production cost. Okay, that becomes non-production costs. Non-production costs are normally classified into four. Non-production costs, we can say non-production costs are normally classified into four groups. Into four what? Groups. Non-production costs are normally classified into four groups. are normally classified into 4 groups. Okay, so let's look at the 4 groups of non-production costs. Non-production costs. We are saying that non-production costs are classified as what follows. Are classified as follows. Number 1, we have what is called selling costs. Selling costs, e.g., advertisement costs. That is selling costs. Next, distribution costs, e.g., transport of materials, of finished product to the market. The cost you incur to transport finished product to the market is part of distribution costs. Next, administration costs. What are administration costs? Costs incurred to run the business, e.g., costs incurred in the human resource office. So those are administrative costs. And lastly, finance costs, e.g., interest paid on loan. So when you have been asked what are the different types of non-production costs, it can be selling costs, it can be distribution costs, it can be administration costs, or it can be finance costs. So those are the different classification ways to classify non-production costs. The different ways to classify non-production costs. So that is classification of costs by function. Let me skip number 3. Where is it? Number 3. Let me skip number 3, behavior. I will have it as the last classification because it takes time. I'll have it as last classification. So let me go to classification of costs by, what is the next one? By decision. Classification of costs by decision. Number 3. It will be my number 3. Classification of costs by decision. By decision made or by decision making. So we can say in this case, when costs are classified by decision, we can just say there are 2 types of costs when costs are classified by decision made. When you classify costs by the decision made, there are 2 types of costs. There is what is called relevant costs, and number 2, there is non-relevant costs. So when we classify costs by their decision, costs can either be relevant costs or it can be non-relevant costs. So there are 2 types of costs when costs are classified by the decision made. Costs can either be relevant costs or it can be non-relevant costs. Costs can either be relevant costs or it can be non-relevant costs. Now, when we talk of relevant costs are costs that affect our decision making. Relevant costs are costs that affect a business. Okay, let me talk of our decision making. And I'm referring to the business. So costs that affect our decision making are called what? Relevant costs. In other words, costs that are considered when before a decision is what? Made. Costs that are considered before a decision is made. You know, when you are making a decision, maybe an investment decision, you will look at how much will you spend in order to invest. So costs that you consider when making a decision are called relevant costs. We will come back to it later on, not now. Non-relevant costs, on the other hand, are costs that are not considered when making a decision. Costs that are not considered when making a decision. Costs that are not considered when making a decision. Now, I want you to read on this. I want you to read on this and search on this. What are the characteristics of relevant costs? Search on that. Characteristics of relevant costs. This is an assignment you need to search on and understand what they are. Characteristics. Relevant costs, we can say, relevant costs have the following characteristics. Please read on this so that you understand what relevant costs are. Number one, they are future costs. Find out what is the meaning of that. Number two, they result into cash flows. Result into cash, into either cash inflow or cash outflow. So that is the second characteristic. The third characteristic, they are incremental costs, or what is called differential costs. The next characteristic is what is called opportunity costs. Please, let's make sure we all read on this. Next, variable costs. Next, avoidable costs. Those are some of the. Next, net realizable value of a product. Net realizable value of a product. So those are some of the characteristics. Let's really read on these so that we understand them. Characteristics of relevant. On the same note, let us also read on characteristics of non-relevant costs. Characteristics of non-relevant costs. And we say non-relevant costs have the following characteristics. Opposite of future is they are historical costs. Historical costs are also called past costs. They are also called sunk costs. That is the first characteristic. They are historical. The second characteristics, they are non-cash flows. They don't result into any cash flows. Don't result into any cash inflow or outflow. They don't result into any cash inflow or a cash outflow. They don't result into any cash inflow or cash outflow. Number three, common costs. The other one was incremental or differential. Now these are common costs. Next, we have committed costs. Committed costs. Next, we have fixed costs. Next, we have net book values. Okay, those are some of the characteristics of non-relevant costs. So as an assignment, let us read and understand what each of those means. So that is classification of costs by what? Decision. It can either be relevant costs or it can be non-relevant costs. Relevant costs or non-relevant costs. Let's move a step further. So that was number 3. Number 4. Classification of costs by influence of management. Classification by influence of management. Classification of costs by influence of management. Classification of costs by influence of management. So when costs are classified by the influence of management, it can be these costs can be classified as number A, controllable costs, or B, non-controllable costs. So these costs can either be controllable costs or non-controllable costs. The costs can either be controllable costs or non-controllable costs So when we talk of controllable costs, these are costs that can be influenced by the manager in place, by the management in place. For example, if the company realizes costs are high, the manager can decide to retrench some employees. So we can say such costs, employee costs, are controllable because the manager has influence over such costs. So what are controllable costs? Costs that can be influenced by the management in place. Costs that can be influenced by the management in place. Costs that can be influenced by the management in place. E.g., manager can decide to do away with what? Bonuses that employees receive, or reduce the amount of bonus that employees receive. So in that case, we will say a bonus is a controllable cost. So in that case, bonus is controllable what? Costs. Bonus is therefore an example of a controllable costs. Bonus is therefore an example of controllable costs. On the other hand, we have non-controllable costs. Non-controllable costs. So these are costs that can not be influenced by the management in place. Costs that cannot be influenced by the management in place. Costs that cannot be influenced by the management in place. Costs that cannot be influenced by the manager that is in place, by the management in place. E.g., if prices of products increase because of inflation, comma, inflation is not controllable by what? Management. Inflation is not controllable by management. Therefore, it is non-what? Controllable costs. Therefore, it is non-controllable costs. If prices of products increase because of inflation, inflation is not controllable by management, and therefore it is non-controllable costs. So you need to know which costs are controllable. So before you sack a manager, maybe the business is not doing well, you should only blame the manager if the costs were controllable. But if you find that costs went up and the cause of the increment in costs on costs is not within the influence of the manager, in that case, we will say it is an example of non-controllable costs, and you should therefore not sack the manager. That is classification of costs by influence of management. Let's continue. Number 5. Is it number 5? Yes, number 5. Classification of costs by operations. By operations. Classification of costs by operations. Now, classification of costs by operation. These costs are classified into A, we have what is called avoidable costs, and B, we have what is called unavoidable costs. We have what is called unavoidable costs. So when we classify costs in this category, they can either be avoidable costs or unavoidable costs. Avoidable costs or unavoidable costs. So what are avoidable costs? Costs that can be influenced or changed by change in operations. By change in operations. We change the way we operate in the business. E.g., when labor costs incurred in labor can be done away with by introduction of machines or adoption of a new technology. So such costs, labor costs, are avoidable. Why are they avoidable? Because you can introduce a new technology which will declare the employees irrelevant. For example, if you work in a bank, the work of a teller can be replaced by use of a machine, or by internet banking or mobile banking. It can do away with the work that tellers in a bank do. So in that case, we can say the teller costs are what? Avoidable costs. So on the other hand, what are unavoidable costs? These are costs that can not be influenced or changed by change in operations. By change in operations. E.g., salary of CEO. Whether you change technology or not, comma, you will still need a CEO. So in that case, what is paid to the CEO is what? What is paid to the CEO is unavoidable. In that case, what is paid to the CEO is avoidable costs. So what are avoidable costs? Costs that can be influenced or changed by change in operations, the way you operate. Such costs are called what? Avoidable. Costs that cannot be changed by change in operations are called unavoidable. So in that case, is classification of costs by operations. Classification of costs by operations. Number, I think there is one I left out or I skipped. Classification by elements. Number 2 by nature. Number 3 by function. Oh yeah, yes, I wrote this twice. This is number 4. Number 4 is by decision. So number 3 was by nature. Number 4 is by decision. Number 5, this was number 5. Number 5 is by influence of management. This is number 6. Okay, let's go to number 7. I was wondering why there are fewer. Okay, so number 7, classification by responsibility. By responsibility. So we can start by saying there are 4 types of responsibility centers in an organization. There are 4 types of responsibility centers in an organization. There are 4 types of responsibility centers in an organization. Number A, we have what is called a cost center. Cost center. Number B, we have what is called revenue center. Number C, we have what is called profit center. This is a very common question in exams. And number D, we have what is called investment center. So when we talk of centers or departments, there are 4 types of centers: cost center, revenue center, profit center, or even investment center. Those are the 4 types. Now, when we look at these centers, the first center is called a cost center. So what is a cost center? This is a department or center where only costs are incurred. This is a department or center where you only spend, only costs are incurred. E.g., HR department. HR department is a department where you only spend. There is no money that is coming into that department. So you only spend. That will be called a cost center. A cost center is a department where only, so a cost center is headed by a cost center manager. A cost center manager. Number 2, we have what is called revenue center. So a revenue center is a department or center where only revenue or income is earned. And where you earn, there is just money that is coming in. This department just brings in money, e.g., sales department. Sales department, e.g., sales department. That will be an example of a revenue center. So what is a revenue center? A department where only income or revenue is earned. Number 3, Or C, we have what is called profit center. Profit center is a center that combines the first two. A center or department where costs are incurred, but also income is earned. So we also earn income in this particular center. We also earn income. Not only costs are incurred, but you also, e.g., a branch of a business. E.g., a branch of a business can be an example of a profit center. A branch of a business. There are costs that are incurred, but there is also revenue that is earned in that specific center. Number D, we have what is called investment center. So what is an investment center? It's a profit center. It's a profit center which is also in charge of making investment decisions. It's a profit center which is also in charge of making investment decisions. So if a center is in charge of deciding where to invest in and where not to invest in, it's called an investment center. So when we look at classification by responsibility, there are 4 types of responsibility centers in an organization: cost center, revenue center, profit center, and lastly, investment center. Finally, there is the last classification that is longer, number 8. Classification, and this is the most important. Classification of costs by behavior. Classification of costs by behavior. So we can say when costs are classified by their behavior, there are 4 types of costs. When costs are classified by their behavior, there are 4 types of costs. A, we have what is called fixed costs. B, we have what is called variable costs. C, we have what is called semi-variable costs. And D, we have what is called stepped costs. Stepped costs. So when we classify costs by their behavior, there are 4 types of costs: fixed costs, variable costs, semi-variable costs, and what? Stepped costs. Let's look at them one by one. One by one. So let's start with fixed cost. A. Fixed cost. So what is a fixed cost? It's a cost that does not change. Fixed costs are costs that remains constant throughout the activity level. Regardless of how many units you produce, activity level is units of production. Units of production. Regardless of how many units you produce, the cost will still remain constant. The cost will still remain constant. E.g., rent does not depend on the number of students in a class. So if the rent is paid a fixed amount per month, maybe 1 million per month, it does not depend on the number of students, does not depend on the number of students. I will come back to that. Rent does not, so rent is an example of a fixed cost. Rent is an example of a fixed cost. I'll come back to that. Duplicate slide, I'll come back to that with a follow-up. Number B, we also have what is called variable costs. So variable costs are costs that changes with change in activity level. The more units are produced, the higher the cost. The more units that are produced, the higher the cost. E.g., cost of raw materials. Cost of materials depends on, e.g., I mean total cost, e.g., total cost of materials depends on how many units of a product are to be produced. How many units of a product are to be produced? So total cost of materials depends on how many units of a product are to be produced. Depends on how many units of a product are to be produced. That is an example of a variable costs. Number C, there is semi-variable. Sometimes it's called semi-fixed. Semi-variable stroke semi-fixed cost stroke mixed cost, whatever term is used, are costs that have the characteristic costs that are costs that are both fixed and variable. That are both what? Fixed and variable. E.g., salary to sales person is an example of semi-variable cost. Is an example of a semi-variable cost. Salary, e.g., salary of a salesperson is an example of a semi-variable cost. That is, the salesperson will receive a monthly fixed salary, but will also receive a bonus. Salary of a salesperson is an example of a semi-variable cost. That is, the salesperson will receive a monthly fixed salary, but will also receive a bonus. That is a semi-variable cost. Finally, there is what we call D. There is what is called stepped costs. Stepped costs. Now, a stepped cost is a stepped costs. Stepped costs is a cost that remains constant up to a given activity level, beyond which it changes, then remains constant for the next bracket of activity. Then remains constant for the next bracket of activity. A cost that remains constant up to a given activity level, then remains constant for the next bracket of activity up to a given, then remains constant for the next bracket of activity, e.g. supervision costs. Supervision costs depends on number of employees. That is, we may have one supervisor for a maximum of 10 employees. The salary of one up to a maximum of 10 employees. I think up to there is enough. Now, when the number of employees exceeds 10, we will need a second supervisor. So maybe up to 20, we need 2 supervisors now. Up to 30, we need 3 supervisors. Up to 40, we need 4 supervisors, etc. So basically, those are the types of costs that we have. Maybe for the next 10 minutes to 20 minutes, let us analyze those costs one by one. So let me duplicate that and I come on this. Now I want to analyze these costs one by one. I want to draw the costs. How do these costs look like? How do the costs look like? We want to do that analysis. So let's start with the fixed costs. Suppose I'm not very good in drawing, so I don't know. Okay, let me see. I'm trying to look for a. Okay, I've known what I'll do. Sorry for that. Let me erase that. And I use, yes, this. Again, I erase. I'm almost there, don't worry. So I have something like that. So if we are trying to draw a cost, a fixed cost is a cost that will be constant. A cost that will be an example of a fixed cost. Now, suppose in this case, suppose here we have this is normally called the y-axis. Just be patient a bit. I'm trying to find a best way to write. Suppose here we have total costs. Total costs. Just be patient with me a bit. Technology is becoming a problem. So suppose here we have total cost, y-axis. And in the x-axis here, we have units of production. Units or activity level. Activity. Activity level. So y-axis total cost. And maybe here, we are looking at spending maybe $1,000. $1,000. So regardless of the number of units, that is the amount that will be incurring. So if here, maybe we are producing 10 units, there we are producing 20 units, there we are producing 30 units, there we are producing maybe 40 units, there we are producing maybe 50 units. So regardless of the number of units, and there we are producing zero units. So regardless of how many units you produce, it will be something like that. So fixed costs, whether you produce 0 chairs, 10 chairs, you will still pay rent of 1,000. So that is an example of a fixed cost, a cost that remains what? Constant. That is an example of a fixed cost, a cost that remains constant. If I duplicate that and now look at fixed costs, I now look at, sorry. I come to variable and, now what will we do? So that is an example of a fixed cost. I'm trying to see how we can. So this was not the best tool to use. Let me change the tool. It was not the best tool to use. So, but you have already understood the concept. But let me change the tool because the tool does not allow me to move around. So let me change and use a different tools. There are always different ways of managing these things. So let me look for another tool. Just a second. Yes, I think I can get another tool here. Okay, so fixed cost looks like this. Now this one does not enable me to draw a straight line. Okay, that will work. So fixed cost is, we have said fixed costs will look like this. This is an example of a fixed cost. So we have said for this, in this case, we'll have total cost, and in this case, we will have what? Activity. Activity. In other words, the number of units. So regardless of the number of units that you produce, the cost remains constant. That is an example of a fixed cost. That is what I wanted. Okay. So regardless of how many units you produce, the cost will remain that. The cost will remain that. So this is an example of a fixed cost. So let me duplicate this. And then I bring it here. But now we look at variable costs. Variable B. Variable costs. Variable costs example. Variable costs drawing. So in a variable cost, it will not be like this. That will not be an example of a variable. A variable cost will look like this. That will be an example of a variable costs. Variable costs. A variable cost will look like that. I'm just giving examples. Duplicate, and then we want to look at semi-variable. How does a semi-variable cost look like? Semi-variable costs. A semi-variable cost, on the other hand, resembles this. It starts from some point in the y-axis and it increases. Semi-variable. So up to here, regardless of the number of units you produce, whether you produce 10, regardless of the number of units you produce, there is a minimum here. This minimum here becomes the fixed. So this amount here, this is the fixed, and this amount there is the variable. That is the variable cost, and this is fixed cost. That is fixed cost part. That is why it's called semi-variable. This is the cost that carries both the fixed and the variable. That is called semi-variable. I'll duplicate lastly. There is what is called stepped costs. Stepped costs. Stepped costs. Stepped cost. So stepped cost looks like this. I'm just rubbing this first. Now, stepped cost looks like this. It's a cost that remains constant up to a given activity level beyond which it changes, then remains constant again, just give me a call, just a second. I'm very sorry for that. I got some important and urgent communication from my boss. I had to respond to it. So sorry for that. So let's continue. By the way, I was just winding up. We were on stepped cost. I was just trying to explain the stepped costs, how the stepped costs works, something like that. So that is an example of a stepped cost. So when we classify costs by behavior, we have 4 types of costs. We have fixed, variable, semi-variable, and stepped. You must be in a position to critically analyze how each cost works. How each cost works, it becomes a stepped cost. I hope we are together there. So that is the first part of cost classification that I wanted us to look at. So when we meet next, I didn't want to mix these. Let me just exit this. I didn't want to mix these with another area. Okay, sorry. Let me remove this now. We are done with it. So when we meet next, which I want us to discuss when we are to meet, I want us to have as many. When we meet next, I'll stop inking. We will look at costs, or we'll look at what is called estimation of costs, or costs estimation. Costs estimation. That is what, and the reason why I don't want to start this, it's because it's calculation. So maybe you can unmute Doreen. The other person is not in a position to talk. So Doreen, you can unmute so that we speak now. Doreen, you can unmute. Now, Doreen, I want in the next class, you must have a calculator. Are we together? Because this is where we are now going to start the next class. Maybe I'm not hearing the conversation. Can you type in the chat? When can we have the next class? Can we have the next class tomorrow at 4? Or you have another class? You can type in the chat. Thank you. We can have it on Wednesday. So let's agree to meet on Wednesday at 4. So you can have a calculator by then so that we start calculation. And this is where calculation of management accounting starts until the 14th chapter. It will be calculations, calculations, calculations. Otherwise, have a good evening. See you next time. Thanks for your attendance.